welcome to a special live extravaganza of Leading Change. I get the opportunity to bring you guys 12 of my favorite experts in the insurance industry as we're going through our trends to watch for 2023.
Trend I think that is going to be big in 2023 and beyond, but it's really customer-centric innovation. And so it's really talking about the demand for hyper-personalized and real-time service, and really thinking about the client and the policyholder or your customer, whoever your end user is, putting them really in front and thinking about them before you make any decisions. So that could be on the topics of adopting things in your realm, Ema, like adopting artificial intelligence, machine learning, digital platforms, but it really takes into consideration of looking at the different risks that our industry is going to face, whether that's climate risk, reinforcing, ESG-led strategies, looking at proactive risk management, looking at different ways that we can come at the industry and tackle the biggest problems, but starting with the voice of our customer and what the insights and what everything that's going to come from that design thinking, that design approach of constantly be continuously improving on getting the proper information for where we are right now, but where we're going into 2023 and where we're going beyond that.
My trend is I'm seeing a direct-to-consumer bubble burst in 2023. And we've got some overinflated valuations on some Insuretechs that came into the market in the last couple of years. We've got the drive of VC money. We've got some underperforming P&Ls. And so all of this is kind of primed for a little bit of a bubble burst, in my opinion. One of the reasons why I think is that D2C is kind of treating themselves a little bit like a commodity, which is a no-win proposition. And coming from an agent point of view, we know that insurance really lies in the protection and the relationship and the customer-centric relationship that we have in insurance rather than the product itself. And they're highly customizable. They're tailored to be specific, which is really the opposite of what a commodity is. So we've got D2Cs that have kind of lured themselves into this false sense of security by starting with insurance products that maybe more look like commodities. These kind of we call low-hanging fruit, really easily embeddable products, but they're going to have a problem going up market. I think that really hits home when you start to get into commercial and large commercial, anything with premiums over 10 grand. I think they're going to be ill prepared for that without embracing the independent agent channel.
Well, I hate to be the Grinch, guys, but it is put up or shut up time for Insuretech in 2023. And I think we've already seen a lot of that in 2022. Quite honestly, much of this has come from the macroeconomic environment, right? Inflation, the rise in interest rates, the focus from growth to profitability. We've seen, unfortunately, a lot of layoffs this year. We've seen some failures. And so I think it really is time. And this echoes a bit what Margo was saying, but we really want a value to be demonstrated. We're not going to go on the promise of tomorrow.
A bunch of things. I've always thought about the big business drivers in insurance for this year as being embedded, risk removing, adaptive, carbon neutral, and human centric. So I bundle kind of things like AI and automation into human centricity. And but I think what I'm hearing as well when I'm listening to everybody coming on this call is we're in this sort of golden era of technology driven transformation in insurance. And why this call actually feels so appealing, because we're being acted on by all these technology trends, and it's a really, in the 26 years I've been involved in insurance, this is a tipping point moment for sure. And it's hard to pinpoint those tipping points, but I think we are in one. And I think the thing that's going to define us going forward is how adaptive the insurers are. I think it is the defining moment for the Insuretechs next year, as our last guest suggested. But I also think it's a pretty defining moment for insurance businesses as well. They've got to start being truly adaptive and responding to all these new customer needs using all these great technologies available to them. So I guess my catch-all trend for next year is that adaptivity will define the competitive forces of the industry over 2023.
I was going to say, like you've said it, Rory, and my trend, had we not been going quite through this rapid fire, would have been just that idea of finding the balance between people and technology. That's a conversation that pretty much every conference that I was at this last year was had in some capacity, whether it was up on stage or in conversations at people's booths and the like. That is something that we're going to continue to see more and more of as we head into 2023.
I think it all stems from this, as we all know. Bottom line is the industry is getting less and less experienced, plain and simple. But it's requiring more and more and more expertise. It's requiring better and better service, higher customer service ratings, better customer experience. All those things are extremely important today. but yet we're supposed to deliver all of that in the midst of, an exodus from our industry of just people that are aging out, retiring, and or moving on to other industries. So the question that I've had to answer myself and a lot of the things that we do is, how do we do more with less people? How do we get the right experienced people to touch more aspects of the claim process, in our case, more aspects of the assignment process? And it's not about trying to shove more people through and learn the entire process. It's really about, in my opinion, it's about breaking down the process. Instead of driving 4 and 5 and 6 major milestones, drive all 30 micro milestones, and then figure out where everybody else can actually fit into that process and what people need to learn. It's really easy to teach people 1 to 2 parts of a process instead of trying to teach them 30 parts of the process. And that's really where it gets creative. So if you've got, during normal cyclical daily times, one person can manage the entire 30 steps of the process. They can do this, run the claim, adjust the claim, deal with the contractor, handle the scheduling, all the other things. Well, during a CAT, during a major event, or when you're just out of talent, you need to take that 30-step process, break it down, and say, hey, all right, now they just need to be a part of every 5 steps of this process to ensure the QA, the QC, use better automations. Now, the complicated part of this whole thing is it requires a lot more planning and a lot more process management across the board, because believe it or not, it's actually going to take more time to handle a claim, because you're going to have an assembly line effect with more people. There's going to be slight duplication over each thing. But the difference is the quality assurance and the quality control throughout the whole entire process is going to be managed and handled and broken down by the people that know it the best, to ensure that it's never moving on the wrong foundation.
Insurance, by definition, was created on static processing. We've always monitored risk, but our industry and all the processes that we've done, from our systems to policy administration to claims to underwriting, have all been static, meaning point in time. And as technology, from data to risk monitoring, et cetera, has become more real time and dare I say streaming, right? The world needs to switch. We as insurance, this is my big prediction for 2023, we will see more and more dynamic capabilities, and underwriting, drum roll, will be the first to usher this in. Yay!
I love technology. I love process. I love insurance claims. But I think it has become more and more complex as we're trying to simplify things. So my prediction is we're going to simplify the way we operate and the way we handle claims and the way we underwrite. I think part of what has been a challenge for our industry is we have deployed a lot of technology to solve a lot of different problems. And now it's a chance for us to strategize and understand what is it that the customer wants, whether it's, text messaging or communication and or predicting risk analytics or anything like that. How do we take the existing information that we have and optimize the way we operate?
In insurance, to be able to deliver on a sustainable world, and I call it commercial sustainability because I'm super interested in commercial lines, actually. That is where I'm going to focus my attention. That links back to some of the discussion already had before, meaning we will need to move away from static to more dynamic underwriting. So we need to take all this geospatial data we have out there and we need to make sense of it. And that requires for us to change the way we underwrite product and services and how we predict and prevent the risk of the future.
So I'm cheating because I'm not sure that this is going to happen in 2023, but I think the seeds of it will. And for some carriers, they may get further along. But look, we've spent the past few years deploying all of these different point solutions for digitization where we had to because of the pandemic. And of course, some folks have done this more strategically, more broadly, but really broadly across the industry, we've seen much more deployment of digital solutions across the piece: underwriting, claims, customer service, acquisition, broker interactions, agents, et cetera. So the question is, with all of that digitization, what information have you had in the past? And information, I mean like useful stuff that feeds into your decision-making, but it was manual. It was in someone's head. It was in notes in a file somewhere. It was a PDF or a scan or an email. What information is now data? So because you're doing things digitally, that stuff that was sort of trapped somewhere in your systems is now actionable, is now specific, is now data that could flow into other points of your process. And I think what that enables is, as we start to piece it together, can we do broader decisioning with all of these different signals from lots of different places across our business? Can we make better underwriting decisions when we've seen the behaviors within a claim, or vice versa? Do we make different choices about customer service and how we proactively support people when we've learned totally nuanced things about how they want to interact, what drives them to be more upset or more happy? Take your pick. But we've got all of these kind of disparate digital points of data being collected. I think 2023 is a really interesting opportunity for carriers and of course, some solution providers to say, what if we gathered this up, this seemingly disparate data, and tried to make better decisions in different areas of our business because of that?
The big trend in 2023, with all due respect to all the other trends, is the growing crisis that's occurring, especially in catastrophe-prone states. So what was a hard market going into Hurricane Ian was a hard market now being lit with kerosene. Just incredible amount of capacity is being withdrawn from the market. So what I have been seeing in the past couple of years, I think starting in a state like California with the wildfires, saw capacity being really pulled out, and you started to see situations where folks could not actually get the full amount of insurance that they desperately needed. And sometimes they couldn't get it at any cost. The insurance literally just did not exist. You saw it a little bit in Louisiana after the hurricane seasons from 2 or 3 years ago, and now with Ian, we're seeing it in Florida. So just really in the cat-prone areas is where the kerosene is being lit. The trend, though, the problem is that this is going to have pandemic-like qualities to it. It's going to be really difficult for reinsurers and capital markets that back retrocessions and things like that. They literally do not want to get behind anything that could be catastrophic. So the trend that I'm seeing is that what we're seeing in Florida, California, Louisiana, a little bit in Texas, we're going to start seeing in the Carolinas. We could potentially start seeing in New York. It's going to spill over. You'll start seeing a hardening, even in mundane and homogeneous product lines like auto. You're going to start seeing it.
The world has changed a little bit where there's less specs, right? Specs is a special purpose acquisition company where made famous by Chamath, right? The guy who was part of Facebook. And basically you can become a company like Roots, Metromile, Hippo, Lemonade of the world, and join with the already existing spec and then go public that way. So this way that you kind of hide your underwriting combined losses, but you can go public through IPO spec. And this way that it's a faster process to go IPO. We're talking about, instead of 7, 8, 10 years, we're talking about 2 years, 3 years. The fundamental of Insuretech companies are changing. And that is huge as we watch how the second half of 2022 played out, where we saw a lot of layoff through tech companies. And a lot of these Insuretech companies value themselves as tech companies. And what does it mean for a trend for 2023 is now it's no longer velocity of revenue, velocity of growth. Now it's about the basics, combined rate, right? It's not just about, we always make fun of Insuretech companies because of their loss ratio, right? But they didn't care because they're chasing the velocity of growth to impress that IPO status, right? But now they're getting back down to the basics of how to run an insurance company, and that is now scarier than before.
My prediction for 2023, there are so many exciting emerging trends, but the one that I really am super excited about is the future of mobility, specifically the connected car. The availability of driving data across the many different sources, I think, is going to provide auto insurers, auto manufacturers, rideshare fleet, safety companies with unparalleled access to actually what's happening inside of the vehicle, as well as what's happening on the actual road. All of the sensors and the many different components in the connected car will help us build a fairly accurate picture of what went on pre-loss, during the loss, and also post-loss. So this fusion of data is really allowing the OEMs specifically to reinvent themselves. I caught a very compelling presentation at Connected Claims, which was probably one of my favorite presentations. Car manufacturers are quickly becoming mobility companies. It's such a fast-changing market. And with next-gen connectivity, autonomous technologies, electrification of the car, and shared mobility, there are many different use cases. And the one that excites me most is how to apply this to claims. So by 2025, the number of IoT devices worldwide is expected to breach 27 billion. That's a lot of data. Specifically, 7.2 billion active smartphones are predicted, 400 million connected vehicles on the road. So how can we leverage this data to create a more accurate, detailed depiction of what occurred when a loss happens is really, really important. Claims accounts for about 80% of the premiums that we intake. So reducing that settlement time, improving satisfaction, these are some of the exciting use cases and applications of connected car data.
But Phillip, thank you so much for not only co-hosting, but tap dancing when I somehow got myself out of the live stream.
Hey, we do what we have to do to support each other, Emma. I've got you covered.
A number one hype man right there, everybody. Get yourself a Phillip if you don't have one. But happy holidays, everybody. And thank you so much for sticking with us throughout the whole rapid fire session. And we look forward to talking more with everybody in the new year. Thank you so much for joining me for this episode of Leading Change. If you liked what you saw, be sure to subscribe and come back weekly for more expert interviews on digital transformation, change management, and emerging technologies.